Hello, everyone. Welcome back to the RationVister.com's Broiler Chicken Show. Let's see if we can do a nice, maybe a nice little, Chris, if you want to maybe even block this out for future, we can do a little me. I think that's right. Oh, started too high. That's too high of a key. You gotta start lower. All right. Anyway, I think you guys all get the idea. Welcome back to the frivolity. Um, my name is Brian Beamish. This is the RationalInvestor.com's website. If you've never watched this video before, get ready for a couple hours of the weirdest rants you'll probably ever see on YouTube. I'm a bit of an oddball, but people seem to enjoy the offering, so that's good. Yeah, we get a good 1,000 or so hits a week, so that's not bad. There's Andre over on YouTube. Chris and I were asking whether that's Andre who I think. Let's see, how do we spin this? If I have something negative to say about Mr. Biden, then I think it's a good day. Something like that. I don't know. I mean, the funny thing with a guy like me is I don't even really care who's in charge. Everybody should know exactly what my mantra is with regard to politicians. I do not like totalitarian dictators. I like this whole concept of freedom of speech, and frankly speaking, I couldn't do this weekly show with all my over-the-top opinionated comments that probably offend way too many people. But I couldn't do it without the ability to have freedom of speech. So I would be a dead duck in Winnie the Pooh land. And I don't necessarily have any great aspirations for power. So as a result, I'd probably do okay in Russia, just as long as you don't poke the bear, right? So I suppose one could argue that that's exactly what's happened in Eastern Europe, and a lot of the sort of New World Order kind of people who want sort of one world government dominated by closes of the world and Hillary Clintons of the world and all that kind of stuff. They're getting a little bit of a pushback right now. So basically, we now have a nice big fat juicy war on our hands. Kind of sad in a way. I often sit with the group, when I do the daily videos and lament at how I'm a little disappointed in this species and how we've gone right back to all this violence. That's such a hallmark of sort of our animal side. Too bad. Anyway, it's not my place to actually. I don't know whether I put a tweet out. Actually, I think it was a tweet. Where I think probably the best thing that I can do for everybody here is obviously things that I say are not going to make any difference in the world. There are going to be the totalitarian dictators, and they're going to be the Mother Teresa's of the world. This seems to be par for the course. Question here is, do we get sucked into that world? Or can we sort of sit outside it and observe and see if we can set ourselves up to both take advantage of times when it is a good time to speculate in the marketplace, and then unfortunately you often have times where it's just not a good time to speculate in the marketplace, and you better understand the difference. Yeah, that's, if anything, that's probably my number one job with all of you people, is to try and help you see that. And I don't think a lot of people new to investing really understand this, is there are times when it is, number one, it's really easy to speculate in the marketplace. And it feels like, just shooting fish in a barrel. And then there are other times when it's actually very, very difficult to speculate in the marketplace, and it feels like you're just swimming upstream, against the tide, like sailing against the wind, whatever analogy you want to use. And unfortunately, folks, we're in one of those times right now. I don't know what the percentage of the audience that watches this show is strictly crypto or, just broader economy and learning how to invest and make good decisions. The good part about what we do is really the great benefit of knowing a guy like me is I've been around this silly game for so long. And, every time, in fact, actually, I think the PMA feed, Josh nailed it the other day. It's so perfect. This right here. I mean, nothing really changes in this game. It really doesn't. And now, well, you don't know. If you don't know, you're about to know. So get ready. But it's taken me, actually, I just turned 50, and actually, I was kind of happy. I went to my little barber, my little Iranian barber. She's so cute. Lamenting, of course, about how dangerous life in Iran right now is, and she'd love to go back, but she probably won't in her lifetime. Anyway, she's adorable. I have really odd hair, so it's hard for me to find a barber that can actually cut my hair normally, and she seems to have the skill, so I always go back to her. But anyway, she's a little bit older, 60, 70 years old kind of idea. So she and I, we sort of lament about life and long-term cycles and stuff. When you get up into our age, I suppose you can start seeing the cycles. But she was actually pretty impressed. She's like, Brian, you don't have any gray. I don't think you're balding, even though you're convinced you are, and no wrinkles. So actually, I'm doing pretty good for a 50-year-old guy. Not too bad. But the point is, of all this blah blah blah, is I've been studying the market like a son of a gun for easily. I would say I got very serious about studying the market in 1992, 1993, right around the time actually I met my wife. I had my first job in the stock market in 1988. But, and the interesting thing about that is I think that you can make the argument. I've really sort of come to respect these 80-year cycles. And actually, there was a study I was working on today. It's remarkable. Now, actually, TradingView can give us charts on things like the Dow going back to 1905. So I can actually see my great-grandfather's trading market. And it's quite remarkable how similar everything is. Just every 40 years, we go through almost exactly the same cycles. And of course, you guys have heard me barking. Anybody who's taken my education program, huge fan of the 35-year demographic cycles. But I also think inside that, there's things like the money cycles. The banksters took over the money system here in North America in 1913. So actually, it's interesting to see the price action difference. We might even talk a little bit about that later on. Sort of the Dow prior to the Fed taking over, and then the Dow after the Fed taking over, and the very interesting difference in price action. Anyway, point of the matter here is Mr. Templeton. Of course, this is actually a pretty famous line going back quite a long time too. And I hate to say it, folks, but I saw exactly the same thing happen last year. I literally saw this happen in crypto again. No. This time it's different, Brian. No. You're wrong. This time it's different. Damn. And the worst part about it is it's not so much that it is different or it isn't different. It's the fact that as soon as you hear somebody say that, that is exactly what they say at the top of every damn market. So it's like as soon as you hear it, it's like, oh no, you just ruined the party, you son of a bitch. It's over. Thanks. Way to go. This time it's dog money. Cool. Cole's a fun member. Actually, I got to say, we have a really interesting community at TRI. Very educated, astute traders, market participants. Actually, I even heard one guy recently say, well, I'm a part of a pump group and a shill group. And of course, they do really, really well in crypto because, it's venture capital. I mean, there's a reason why the guys in the stock market play the bulletin board, and like I love the VSC market. I mean, I've shown you some of my crazy VSC. I think probably this past cycle, my best VSC trade, um, which ironically enough, I mean, the irony of all of this is that this trade in particular, which I want to show you, but I don't know what the hell screen I should use. This trade in particular. It was off a company that the director, I've done a deal with this guy in the past in the silver industry and made a fortune off of that. So how ironic, it's the same damn people. Anyway, this one here, I got really lucky. I would load it up at 5, 6, 7, 8 cents a share, and we're selling. I couldn't believe I actually got fills up here at this foggy boggy level. I actually got fills up here off because of learning this crazy fog and bond concept. And it was incredible to watch as price was zooming up here because it just, even the guys who were probably running the book, they couldn't understand what the hell was going on here. So, it's fascinating that as I said, there's guys on the site who are part of I wouldn't say necessarily pump or shill groups. That's probably not the right word. They're professional guys in the business that when they recognize that we're in a bull market, if you know how to play this game and you're there and you see the breakouts on volume, I mean, none of this stuff is new. It's all the same damn stuff, rinse and repeat. You can make a lot of money, but the problem is that this isn't the kind of market for that right now, I don't think. I was impressed that a couple people were banging off. They were able to sneak in, just grab the momentum on that ape name that was zooming up there. And I put sort of a tweet out saying, if you wake up one morning and you see that right across the board on the TRI dashboards, and this was and actually probably doesn't even show here, but when that ape was just breaking out to the upside, every single name here was ape right across the board. If you see that, that's telling you, like, we can breakouts versus US dollar versus euro versus Bitcoin versus the Turkish lira, which I thought was hilarious. I'm not quite sure why the hell we're following the Turkish lira, but anyway. And I put a tweet out the other day when I saw that. So if anything, it's a great analogy that there's always a bull somewhere in this space. So great to see guys are actually able to make a couple bucks. I'll tell you, it's pretty tough slug in the broader crypto market. And if I understand correctly, although I'm not really that hip on that, and I suppose I could have done a little bit of research here before this video, but if I understand correctly, there's a whole bunch of stuff that sort of hit the fan here. Regarding crypto here through the weekend, if I understand correctly, that Solana's run into a bit of trouble. Actually, Sjord, he came on the lounge and he was like, "Oh well, there's this, and this." So it's a bit of a challenge this weekend. Let's see what he's got here. Solana went dark. ETH gas fees skyrocketed. Some exploits like Saddle. Oh boy. And he's saying he's definitely feel the anxiety and a lot of questionable stuff is happening. Anchor rate is coming down. Of course, Sjord is let's say he's comfortably involved in the Luna network. So obviously he's going to be keeping a close track of that. So a lot of kind of uncertainty in the market here right now. And then on top of that, I appreciate that the crypto universe actually kind of thinks that it's sort of running on its own sort of keel and sort of driving its own bus and all that kind of stuff? I don't think so. I think actually, interestingly enough, if we look at a whole bunch of these are all the FANG stocks that were super popular over the past, I don't know, 5-10 years. Remember I told you about those Jupiter Saturn crosses? Like literally, you can set your watch to a new trend and a new sort of direction for the market every time those damn planets cross. I'm serious, folks. And then also, too, sort of every time they are in opposition. And you want to do it for yourself. Like the proof of the pudding's in the eating. What's Cole got for us? Actually, Cole's going to come on this Thursday and give a nice little chat to the community via astrology to help Julian out a little bit on Thursdays. That's sort of like Julian's day for the daily brief. So looking forward to that. That should be a really fun presentation. A lot of people have been thinking about that. Also, too, Cole mentioned that there was an eclipse over the weekend. So that's having. All right, yeah. So look at that. He's already getting ready stuff. So if you are interested, tune in on Thursday for the daily brief, and Cole will give you a really cool sort of summary of what he's seeing in the skies. But the Jupiter Saturn cross, I mean, just in simplest terms, it happens about like once every, I don't know. I think it's like the cross happens once every 20 years. But what I've noticed is the opposition is just as significant. And we go through these sort of, the demographic cycles. That's 17 and a half years. And I thought it was interesting that, if you looked at the Jupiter Saturn cross, big one was in 2000. And we had another one that was opposition. I think it was 2008, 2009. And that basically corresponded almost perfectly with this sort of the reset of the George Bush presidency. Because I think, to all intents and purposes, the George Bush Jr. presidency was just a big, hey, let's take advantage of as much of the market as possible. And then literally the day that they left office, they just hit the reset button and prices were basically exactly where they were when they started the whole thing. So, what's interesting is, and actually historically, this kind of makes sense too. 1980 was cycle pivot. Probably, actually, I have a really fun little chart that I did up here recently. Maybe this helps. Where the hell is it? And actually, I think I tweeted it out. I don't know what the hell I did with it though. Over here? No, that's not it. Over there. It's got to be this one. But I was actually, yeah, here we are. So I was able to go and find the Dow price action from 1902. But this would be sort of operating on the 80-year cycle. And every 40 years, they reset the whole thing. And of course, that's 2 Jupiter-Saturn crosses. So we started the interest rate cycle actually in our favor. And that would be, let's see if I can show you that image. If we use corporate short-term interest rates to see that image, question is, where the hell is it? One of these, yeah, I think it's this one. So there's the interest rate cycle from beginning. This is actually just sort of like one half of it. So this was the absolute peak of interest rates, 1980 kind of idea, to the absolute trough of interest rates, 2020. So there's your 40-year cycle. And guess what, folks? We got 40 years of it going the other direction now. Woohoo, party. So if you can think about this in like this big honking 80-year cycles, 1980 was actually sort of like almost like the polar opposite of the interest rate cycle. This is where all the interest rates officially bottomed and everybody fell in love with the March 1982 interest rates turn. In fact, actually, I can probably see that on this image here. So many fun images. All right, so this doesn't go the back that far. Oh, not weird. I think it's actually because this image doesn't go back that far. So that sucks. Darn. Well, here we'll go. New charts. There we are. So, what do you think, eh? That's your 1982 pivot. So, if you see that 40-year cycle, right? This was a Jupiter Saturn cross right in here. And this is a Jupiter Saturn cross right in here. And interesting enough, we had a Jupiter Saturn cross right in here. So you can kind of see how there's, like these are the big ones, big, 40-year cycle, boom, and somewhere in there. And then we had sort of the dot-com peak, sort of the absolute peak of the, maybe we'll make that like teal. This is the peak of the dot-com boom, somewhere right in here. So this is what I say is like, this is the, for these particular ones, this is the greed cycle. This is the fear cycle. So this is the baby boomers going into the workforce, working. And of course, at the same time, we also had the collapse of the Soviet Union. So that sure helped sort of inflation, deflation. We also had sort of the end of sort of the socialist movement. And, since this time period, it's been all about screw the workers, outsourcing, right sizing, blah, 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 politically correct wording is basically fuck you workers. And then this is the baby boomers going into their retirement. And there's that's basically the whole baby boomers life cycle here. Entering the workforce, working their butts off, then trying to plan for retirement. Now they're off. Now the millennials will take over and they should do the same thing. Interesting thing is probably this looks the exact opposite, right? So we could, I don't know how you do that, but we could technically just do a, I don't know, let's see what happens. I don't know whether this will work or not, but it might. We go our pattern and go roughly something like that to there. And then we'll flip that around. And I think roughly right. I'm not quite sure if I did that right or not. All right. There you go. Something that looks like that. There's our future. Interesting. You can see the whole sort of history of humanity. So interestingly enough, I don't really actually think that this next, and this should come about roughly 10 years from now, 1930, somewhere in that area. I don't think that this next cycle is going to be as nasty. Or somebody can find out where the so why does that not look right? 2136. Oh, that's 20 years. That's why. Oh, so these are the this is the Jupiter Saturn crosses actually. So roughly there. All right. And then this one here. So really where I would be worried about our sort of Western civilization is actually over here. This is where it's going to get really ugly. So interestingly enough, actually through this period here, and I've often talked about this This should be what they would call normalizing interest rates. Like we were in this weird sort of pocket of space and time, kind of like here. I mean, through this environment, it was just crazy. I mean, double-digit interest rates and stuff, and literally every single day, double-digit inflation numbers. People, you guys have just gotten used to sort of double-digit. Just to imagine if it was just relentless and it just went on year after year after year. Right now, I think that we had this health crisis, which has sort of artificially injected a bit of inflation into the picture. But as soon as that health crisis wanes, I think that a lot of this inflation that we're seeing right now actually unwinds. Also, too, um, China has a major problem on their hands right now with this ridiculous real estate bubble bursting. So the question you have to ask yourself, first off, there's some sort of deal they did with the devil there 20 years ago, ironically enough, actually through this transition period here to try and keep U.S. inflation relatively tame, and the outsourcing, downsizing, all that bullshit. The U.S. government knew that the demographic situation in the United States was really bad, and structurally they were in trouble, and they needed like 20 years to get through to the next generation. So they went and did some sort of crazy deal with the Chinese, let them peg their currency to the US dollar. I have a feeling there's probably some very specific date or something that they did with the deal to keep it that way. Because I noticed through all of this sort of political wrangle and stuff, nobody said boo about that peg. And that would be the one very easy way for the United States to bring China right down, back down to earth, is say, I'm sorry, we're not going to honor the peg anymore. And I believe that the Chinese economy would implode. But it's not the case. So as a result, nothing's happening. It's kind of sad for the Chinese people. I hear stories that they're actually like bolting doors shut, and people are literally being like bolted into their houses. Like, this is insanity. And the worst part about it is I thought we as a species actually were beyond this shit. I actually thought, stupid me, in this lifetime, because I was so programmed in the late 19th century, I guess the late 20th century, I was so programmed that, oh no, through the evolution of nuclear weapons and stuff, that something like World War III can't happen anymore. It's impossible. Yeah, well, that's a good one. Anyway, so there's sort of your long-term forecast for interest rates. And interestingly enough, this would be the exact opposite of that image. In essence, interest rates working their way back up, because this is a, if you're not familiar with this orange line is the euro dollar contract. And I often just sort of assume that you guys understand this stuff, but probably a lot of you don't. My favorite sort of third-party site to track futures markets is this place called futurestradingcharts.com. I always like these guys. I've been visiting their website forever. Interest rate financial futures. So here's 2-year Treasury notes. That's a U.S. government guaranteed paper. 30-day Fed funds. This is actually paper that's guaranteed by this cartel of bankers. It has nothing to do with the U.S. government, which is a little scary. And you notice that, in all of our studies and stuff recently, you see me make reference to things like the Fed spreads, because now we don't know, like it used to be called the TED spread, where we would compare T-bills, U.S. Treasury bills, with the euro dollar market, which is the corporate interest rate market. And because the T-bills would be guaranteed. Well, great financial crisis. Turns out T-bills are worthless. U.S. government's bankrupt. So we had to switch to this cartel of bankers. Notice, hey, where did the T-bills go? U.S. government is insolvent, folks. The banksters now run our society. I mean, that's an interesting sort of commentary that I don't think a lot of people in the public have picked up on. And oh yeah, no, they're a quasi government agency. Sure, yeah, right. You look in the fine print, no, they're not. They are a private consortium. They are a cartel. They are an association of the 1%. And, ironically enough, to a certain degree, a huge portion of this quote unquote Fed funds and Federal Reserve Board is actually people that are not even American. The Rothschilds owned a huge chunk of JP Morgan's ass. The interesting thing is you wonder, this is a great sort of story of history. What does it mean when you see somebody has a big sort of distorted nose? I guess even like that, especially if you see it really pockmark. I don't know whether you can see that or not, but that's actually a telltale sign of an alcoholic. If you ever see like alcoholics, got like a lot older alcoholic dudes, man, they got the biggest fucking noses in the world. It's crazy. I'm not quite sure why it goes that way, but if anything, it makes a lot of sense why J.P. Morgan had a schnoz the way he did. And the funny thing is when he died, Vanderbilt actually was reading his obituary, and he's like, "Holy, I didn't realize that J.P. Morgan was such a poor guy." Because it turns out that J.P. Morgan actually was all full of bluster, and he was the front man for the Rothschilds. The Rothschilds actually wanted to work their way in and take revenge on the American independence movement, because they basically told the Brits to go F themselves. And all the Rothschilds owned the Bank of England. And man, it took them about 150 years or so, but they worked their way right back in, and now they basically, since 1913, the Rothschilds now control American society. Try telling an American that. Oh, they don't like to hear that, but believe it or not, I think it's true. Anyway, so the point of the matter here is you can see interest rate markets. Short-term interest rate policy is now guaranteed by this cartel of banksters. Now, the interesting thing about that, and it just makes sense, it's the way this stupid world works. The banks control everything. My old man, he used to live by the whole sort of debt world. I hate that kind of debt world, but he'd always say the most important relationship in your life is your relationship with your banker. Not your wife? No, banker's far more important. But I don't like to live that life. I hate that life. And I saw what it did to him. Basically, you are at the mercy of your financiers. I don't like that life. I live a pretty conservative life, but at the same time, too, I don't owe anybody a dime. Everything, in my bank account is a positive balance, and I own my own car, and I have no debt, and it's just the life I like to lead. I don't like to be anybody's bitch. So anyway, interesting sort of side. And I suppose you could make the argument, well, if you are a citizen of one of these Western societies, guess what? You are. I think right now, I'm not exactly sure what the number is, but I think every single Canadian citizen alive basically owes the banksters something like, I think it's about $60,000 or $70,000, if I'm not mistaken. So I'm not quite sure how that works. Like in the United States of America, you can't even leave the country, right? You still have to report taxes. You still have to pay. And it's basically servicing that sort of slavery. Canada, they don't follow you around the world, which is interesting. But I would be surprised by the end of our lifetime, the banksters make sure that every single citizen is completely obligated to pay a federal tax, which is nothing more than the bankster's tax. So, anyway, so where am I going with all this? I was originally supposed to be talking about euro dollars. What the hell is a euro dollar? And most people who see this euro dollar, the first thing they think about is, well, that must be the currency of Europe. Makes sense? Euro dollar. Actually, it's not. It's you can have a short-term debt instrument, and you used to have government short-term debt instruments where T-bills, treasury bills, they would expire on a really regular basis. But you also have corporations that issue short-term debt. And, companies like General Motors, Ford, Daimler, big auto manufacturers, they will often sign debt obligations with their customers, 5-year paper. Hell, I can't believe it. Sometimes I hear on the local radio stations, the auto dealers, they'll give you like 72-month credit. I don't even know how long that is. That's a fair distance. That's a fair amount of time. And then what they do is, that'll be at like 5, 6, 7%, whatever. And then they'll refinance that debt obligation in the short-term market using Eurodollar contracts. So you can think of Eurodollar contracts as the corporate short-term debt market. And this market is absolutely huge. You can't even really wrap your head around how big this is. I mean, it's just absolutely stunning how big this is. Each one of these contracts is on $1 million. So, like, literally, the way this works is, like, let's say May, and this will basically settle in the next few weeks. I could go and buy this contract for $98.43. And so, literally, my rate of return between now and expiry is I'm going to get paid $1 million, but I'm going to pay I'm going to pay 0.9843. So times, or that $1 million that I'm going to collect in like a week is going to cost me 2 weeks, 3 weeks, whatever, is going to cost me $984,300. And literally the difference between this $984,300 and the $1 million is my short-term interest. That's my rate of return. And then conversely, if you're lending, right, you're going to sell and then you're going to collect $1 million on expiry. So it works both ways. But in essence, this is the corporate interest rate market. And just so you understand how the rates of return work, these instruments mature at par. And basically, what you buy them for today, this number, the difference between par 100 and this number is your rate of return. So it works the exact opposite. So if anything, maybe the boys want to do like a little, our YouTube page, they're doing little 5-minute explanations how the markets work. Maybe that's a nice little sort of piece that they can throw up there. How does a Eurodollar market work? What the heck do these numbers actually mean? So if you're actually looking at a yield chart, which this is the yield on the US 30-year Treasury bond, right? It's going to be just sort of like, oh my goodness, interest rates are rising. It's going from the lower left to the upper right. But to look at the same rising interest rate environment in a Eurodollar market, it means that the chart is actually going from the upper left to the lower right. Keep in mind, there's a monthly chart. So if I change this to like a weekly chart, all right. So now hopefully you can see, now I see short-term interest rates are rising. So it's the exact opposite of what a bond yield chart looks like. Hopefully that's somewhat helpful. I don't know if it is or not. I guess what we were getting on to about here is sort of like, what does a lot of people that I'm hearing about, they're really freaking out about double-digit interest rates and stuff like that. I don't think we're going back to that kind of environment. I think what ends up happening is we sort of end up bumping along. And the irony of it all is through this cycle, like as I sort of said earlier, if you just did like what's a 50% rule? And we'll just sort of ballpark this, boo. and 50%. This is where rates should naturally top out. And actually, that's an interesting number. Why is that such an interesting number? Well, it actually, a lot of people who invest in fixed income, they love the rule of 72. You probably never even heard of this before because I don't hear anybody talk about fixed income investing anymore. My hunch is probably over the next 10, 20 years, you'll be hearing more and more and more about it. Anyway, so what happens at 7.2% interest? Does something happen? Is there something that if I buy something that yields 7.2%, I know that this is going to happen in exactly 10 years? And is that important to investors? And the irony of it all is this is often why fixed income instruments actually can compete with stocks. So, what happens at 7.2%? Anybody know offhand? Why would 7.2 be important? Nobody? How about over on YouTube? I haven't been looking at that page. See if there's anybody even over there. Hey, look at all those people. Hey, there's 45 people over there. Hello, 45 people. How's it going? All right, Brian, please take care. We need you. Yeah, oh, why? Did I do something wrong? 1913. I know, isn't it criminal, Andre? I mean, like literally, they pulled off the biggest fucking scam in the world. I mean, it's absolutely incredible what happened there. And you know what's worse is Woodrow Wilson himself even said, I can't believe I just basically sold my entire country down the river. And there's nothing you can do about it now. One guy can destroy all those guys, that were sitting there, Articles of Confederation and, Declaration of Independence. And one guy can undermine the whole damn thing just with one approval of the Federal Reserve Act. And boom. And how ironic. The Fed, the fucking banksters go and put up their Taj Mahal right across the street from Abraham Lincoln's memorial. The one guy that stood up to the banksters and said no. I mean, if you look at all of the little pieces they put together, it's shocking how blatant all of this message is. It's just absolutely shocking. Anyway, back to our story. Does anybody know what? Nobody knows it. Cole, you should know this. 7.2. What happens at 7.2? Why is 7.2 important? I mean, he's a big racist too. So go figure. Anyway, I'm going to fill my coffee up. I want you guys to be able to answer this. Think, what's so damn important about 7.2? Anyone? Anyone? Hey, somebody got it. Hey, our Andre guy. Of course. Hello, Ahmed. Anybody in the hangout here get it? Yeah, your money doubles at 7.2% every 10 years. So people love that. If I can just go and buy a bond, which is a guaranteed instrument, right? Principal's guaranteed. Hey, if I went and bought any one of these? I mean, yeah, this could get ugly for people like that are quote unquote invested in Netflix. I mean, is there any guarantee to your principal here? Any guarantee at all? Hate to say it, folks. No guarantee whatsoever. They can all technically go right off the board, except good old Bitcoin. Now, what is it about Bitcoin? Why is it that Bitcoin is not like a Google? It's not an Amazon. It's not a Facebook. It's not a Netflix. Are they the same type of asset class? They're not. They're different asset classes completely. So it is kind of fascinating to see Bitcoin actually moving with these tech stocks. It's and I guess my assumption here, of course, and the market's assumption is that something like a Google is not going to go off the board. But nonetheless, they're actually completely different asset classes, and you shouldn't even categorize them in the same asset matrix. But it is fascinating to watch the way that Bitcoin does trade, very similar to the big tech stocks. But just make no mistake about it. Netflix, Facebook, Amazon, Google, even the QQQs for that matter, none of this stuff has any guarantee to it whatsoever. And the actual tell here of when these tech stocks actually will probably find bottom is when this tech proxy itself, which I think Bitcoin is a very, very good tech proxy, it will start trading at what it actually cost for Bitcoin to survive. Um, what it will actually, the whole point here is there is actually an underlying intrinsic value to Bitcoins. Unfortunately, I don't think it's anywhere near current prices, which is a bit scary, but this is the way Bitcoin does every damn cycle. So I don't know why this cycle would be any different than any of the others. And of course, you all know I didn't quite swear, so hopefully he doesn't have to bleep it out. But for Pete's sake, you all know now. As soon as somebody says no, 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 but this time it's different, you know what to think. It drives you, and the worst part about it is while it's happening, it drives you crazy as somebody who is sort of like, well, I've been doing this for a while. I think I know what's coming next. It just drives you crazy to see how serious the kids are. They're so serious. No, Beamish. And then you see the whole okay, maybe you're right. Maybe you're right. Okay, fine. Maybe you're right. And then the whole damn thing falls apart. And we do it all over again. So I don't know. I get the problem exactly. Astros just says here everything moves in cycles. The worst part about this, folks, you have to learn this, is everything seems to just move in a big damn circle, and it drives you crazy because you kind of every time we do one of these moonshot things, you're like, okay, well maybe we'll hold on. Maybe this is it. Maybe this is legit. Maybe, guys, magic internet money. Maybe this is legit. Maybe it's real. No, 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 no. And the interesting thing is, and really, what I need for all of you to write this down, you can set your watch about once it's just about every 10 years, Jupiter Saturn cross, Jupiter Saturn opposition. That's basically every goddamn time the market pivots. And when you go through one of the crosses, and it's like serious transition. You go through the oppositions, and it's like sort of like a midpoint check. So, I guess with that in mind, what I'm sort of worried about here is I think things like the sickness cycle, and now unfortunately this war cycle. I think they're going to be what's dominating for this next period, which sucks. I don't know how long the whole war thing goes. interestingly enough, I personally just don't think Mr. Putin can really take on the whole world. I just don't think he can. But I don't know. We'll see how long that goes. As for the sickness, I already start to see that it looks like the sickness sort of oomph is already petering out. And I hear a lot of places that are just throwing in the towel and they're kind of saying, yeah, Omicron's everywhere. You're pretty much guaranteed to get it. So get used to it. And I don't know whether I was recording. I don't think I was, but actually, I've got a really cool way to sort of figure out if I'm sick is I just don't bathe. And then that way, if I wake up in the morning, I go, woo wee, Brian, you stink. Oh, that's cool. I'm not sick. Awesome. If I ever wake up in the morning and I go, no, I don't smell so bad. Uh-oh. I think I'm sick. Yeah. I'm just being silly. Actually, you all know, and I really appreciate it. Totally, it fills my heart with joy. You all know that every Thursday and every Sunday I take Liam out and we have a fun adventure out in the Lower Mainland for about 3 or 4 hours twice a week. So you all know that I have to be pretty for him. So yes, I do bathe. I was just trying to be silly. Um, yeah, so somebody's mentioning the US dollar's going crazy. I mean, the irony of it all is this has basically been my thesis. This is the backbone of everything that I teach you guys. So I did find it interesting that basically the US dollar index, to all intents and purposes, pivoted off of that Jupiter Saturn conjunct. And fascinating how we had things like what was it called? The insurrection. Yeah, whatever. Um, uh, it's fascinating how that did basically correspond with that whole event very nicely. Something that actually jumped out at me, like if you're starting to think that, okay, well, this is unique. Actually, I don't think it is. And I think I was showing you this image earlier. This kind of startled me when I thought about it. I was driving down the road and I'm like, okay, so 1942. Like if you actually look at the year-over-year inflation data numbers, the year-over-year inflation that we're seeing from 1942 to today is almost identical. So if that's the case, then there must have been something fishy going on here, right? And I've shown you guys these images before, right? I really think that there is nothing new here whatsoever. It is completely cliche. And it is a function of this money cycle, the way the banksters, and even Alan Greenspan even said it himself. If you take the U.S. off of the gold standard, which they did in the 70s, and he got rather upset about all that, he was like, fine, I guess we'll deal with your new sort of petrodollar nonsense. But he repeatedly said that basically this is just confiscating wealth from the nation. That's what's going on here, folks. We are literally having the wealth of the nation stolen from us right in front of our eyes. That is what price inflation is. And it's a bit tragic because if you go out into the public has bought into it hook, line, and sinker. And like a really good analogy of the capitalist machine. And so if you listen to people like Bill Gates and stuff talk on television, you always have to ask yourself, now, what the hell is really going on here? Remember, how do we tell if a politician is lying to us? Just remember that. I mean, it is gospel. They have no choice. What I find fascinating nowadays is actually there is no such thing as ideology. We talk about the left and the right. There is no left and right. It's just one special interest group basically going after another special interest group's head. And what's so tragic is if, the quote unquote left gets into power, well, all of their institutional players all act like, commie czars, right? Well, I thought we were supposed to be a socialist movement. No, well, it turns out that actually there's There's a hierarchy even in socialism, and it's the same stupid human bullshit. Whether which poison is worse? It is the Dickinsonian sort of Scrooge society where debtors' prisons and they're just absolutely ruthless and they have absolutely no heart whatsoever. Is that better or worse than the commissars, gulags, and the like? I mean, which is worse? They're both the stupid fucking humans that are just assholes. I don't know whether you know or not, but actually, I shouldn't give the secret away. But no, I won't. I used to always joke with the people on the site, and they didn't know whether to actually believe me or not. When I used to say lines like, "By the way, I'm not human, you know. I'm here to try and help you people." They'd be like, "Is this guy serious?" Because I mean, when I sit here and I watch the way the humans behave, I don't know whether I am a human being or not, because I don't live my life at all the way that these people, live. I don't get it. Anyway, back to our story. If you sort of, and the hardest part about this particular cycle is the way that the banksters have gone and screwed with the money supply. Because the way that they've gone and screwed with the money supply, the people in the public, they can't see this now, right? They see this image and they don't see this image. But if you take the screwing around with the money supply out of the equation, you actually see, gee whiz, these images look almost identical. So go figure. They made it really, really difficult on us here this go around, which kind of sucks. It's not really fair. But I wanted to show you one particular. Actually, you know what? This here, it's totally off topic, but this, if anything, is a really good sort of tell that Brian's actually trying to help you here, not trying to shill you. And how did I act through this event? I think, if anything, is a really good barometer of how I'm going to treat you as a student and as a site member. This is a pretty good looking bullish setup. And I touted on the site that I bought this W. It's a pretty good looking trade. And the setup that I trade basically is looking for this target up top here. But according to my rules, if the market rallies up into half of my anticipated move and then starts to crap out, I got to walk away. So, first off, if you're going to learn setups from people, you better learn setups from people that actually obey the setups. If you hear somebody say, "Oh, yeah, well, I bought this, but then it broke down and I was supposed to exit, but screw it. I'm not going to bother." That's bad. That's not a good teacher. You don't want to go down that road, because you start sort of fudging with the rules, and then one day this thing will just collapse and you're like, "Oh God, what have I done?" So, this was a good example that you can see that it broke down about sort of the beginning of last week. And this is a daily chart. So Friday, Thursday, Wednesday, Tuesday, Monday. So, actually they broke down last Friday. I think that's right. 22nd. Oh, Sunday. Well, that's weird. Not quite sure how that works. 21st, Saturday. Okay. That doesn't make any sense. What the hell's going on here? Oh, no. Okay. Okay. So always good to sort of just check to see whether you got your head on straight. There we go. 22nd is Friday. So 22nd Friday, boom, broke down. And what was interesting about this is you see, there is my, entry level. And I think this is it. I don't know if I got that exactly right or not. Just for the purpose of this conversation, you see how we failed here. And that Friday, I should have exited the trade. And actually, it was interesting. Brian blabbing away for 2-3 hours on Daily Brief. Then after the video was done, there was a gentleman who was on the site. And actually, it's interesting. I haven't seen him on the site too much since. But I was saying, oh boy, I got to go exit this position. And then we were just chit-chatting away. I let time slip by, and then by the time we were finished the conversation, I looked down, it's 1:30, the market's already closed. Uh-oh, Brian, test, made a mistake. So the question was, how was I going to handle this? And of course, Monday morning, market gaps lower, freaking out. Oh, it's the end of the world. But, probably not a good idea to panic. Just, keep a level head. Sure enough, through the week, the market pivoted, rallied back up, kissed my fail level, and I, on the site, publicly told everybody, exited the position where I was supposed to. So, great example, scratch trade. Didn't go and make a ton of money, didn't lose a ton of money, so that's always good. Scratch trade, next bus in 10 minutes, live to fight another day, blah, 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 blah. And yet, probably a lot of people that looked at that going, and this is the guy I'm supposed to be learning how to make $1 million with in the marketplace? How does that work? But believe it or not, how you handle your mistakes actually is far more important than how you handle your insane winners. Insane, when we're in a rip-roaring bull market and everybody's just making tons of money like crazy, it's pretty easy to step in front of the market and the market just swishes you higher. It's when the market starts failing, of course, big fat M's, and levels start giving. How do you handle it? Do you follow your plan? And then if your plan simply said, I got to walk away at scratch and just, no ego, just exit the position. Tomorrow's a new day. That's what I had to do. And I didn't do that on the event. I was a little cross at myself for that. But I was able to just manage myself, keep a cool head. And, on Friday, I exited the position. So kind of boring, not really very exciting, but if anything, really good analogy of a trader's life. All right. There was, I don't know whether I covered the topics. I sort of was in mid-conversation there. Just to give you an idea of what I'm thinking about Bitcoin, I actually think that we're in this sort of 4-year cycle, sort of repeat of the 13-14 kind of 13, 14, and 15 ultimate bottom, and 14, 15 being 22, 23, according to the Benner cycle. So this looks very kind of, the difference with this was this particular part of the cycle, they ramped up the market there off of the low, and then the really big honking crazy ass move came in there. This time they did it the other way around. Big honking crazy move here and little itty bitty move on the other side. It's backwards. But to all intents and purposes, I think it's basically the same image. Actually, it'd be interesting just to see. This was, what does that say? 330% move. Interesting to see what percentage this is, say, from here up to there. Yeah, 400. Yeah, so I think that's kind of what happened here was, that's, that's from an arbitrary level there. But I think what happened, and actually it might be interesting to see what this breakout is here. Well, that's a pretty big move. So maybe yes, maybe no. But what I think happened here was that they front loaded. And of course, this was Allen and his dog money and stuff. And then the backside of this was sort of the DeFi sort of final sort of hurrah. Didn't look the same, but fascinating how the dates actually lined up really, really well. So swing high, swing low. This is what really has me curious about this current move. Is I would have thought to be, and I said this last week, and I'll say it again. I would have thought there was one more push up here into May, June. So hopefully, hope, fingers crossed, we still do rally up here. In the short term, oh goodness, the problem here is now that sort of the anecdotal evidence is starting to build. And I hate when it starts to build because it just gets to the point where you're like, well, Brian, come on, there's just too many reasons for this darn thing to go down. So I just put a tweet out a few minutes ago. This is sort of what I was working on this morning. I can see like 4 or 5 solid reasons for this thing to come back down into sort of somewhere between 10 and 20,000. Which you guys don't like. And the problem here, of course, is how long does it take for this to happen? Keep in mind the last cycle peak right here. And this is actually what's fascinating about this is actually, this was stunning. I think I've talked to you guys about Dog Money did sort of the exact same thing last May, but here's, that is December 11th. And then notice the bottom here was December 10th. It's like literally exactly 1 year from top to bottom. So, and then we go back the last cycle. And you can see, in fact, I remember when I came in, was on TradingView. Actually, we were doing, and it's kind of funny. Actually, I almost never go on this chart anymore. I hope these guys are doing okay. It's kind of funny. I don't know if they even know they're on YouTube. Anyway, so we do the same thing here. Top to bottom. Oh, look at that. 59 bars. There to there. I got a funny feeling that's what we're looking at. 59 bars. Remember I said I thought that this is the appropriate cycle for this go around. And notice also too, man, this is just a down, lower highs, lower lows, lower highs, lower lows, lower highs. I mean, it was just grinding. And I remember through this period right here, I remember one guy in particular, I really liked him. He actually even named a setup after him. He lost it and he freaked out right here and panic dumped his Bitcoins. So sad. So, is this the kind of environment that we're in, and we got to slog our way through here over the next, I think right now, if we sort of do the comparisons, I think right now we're sort of like right here, actually right there, right? So if anything, there's that little May rally window. I'd love to see that. That would actually make everything fit according to geez, now I'm done with it. That 4-year cycle that I was looking at. Oh yeah, I wanted to talk to you guys about this. Darn. I have a hard time keeping these darn charts straight. Okay, so not over there. Let's go back over here. All right, so this is sort of that same 4-year cycle conversation. I really thought that there was going to be some sort of counter trend rally here into the end of May, beginning of June. So fingers crossed. I mean, maybe we can hold these lows and turn back up here. Tell you in the short term, though, that image that I just showed you, like all the reasons to think bearishly, I hate when they all start stacking up like this. So, where did it go? Oh, darn, it did it again. Oh, that's weird. Oh, yeah, because this is the old one, right? There we go. Sorry, everyone. So, reason number one, and we actually teach this in our education program, super, super valuable concept. Can you see value here? I mean, this is the kick in the pants, and this is why it's so important to hunt for markets that have been consolidating for a long period of time. Does it make sense that there's a lot of energy that gets built up in this consolidation as bulls and bears fight it out? Oh, I think it's going to go up. I think it's going to go down. I think it's going to go up. I think it's going to go down. So that, from a volume profile perspective, this is the visual evidence of that energy. It's a handy tool. It is a visual, this is called volume profile, and it's just a visual demonstration of where did the actual volume trade. And, time and time again, and it drives you crazy, but time and time again, you see price go zooming up here. And the only guys who are actually buying are the German guys who are saying, "Hey, we're going to the moon. Hey, technical analysis doesn't matter. Buy, buy, buy." So the actual institutional, the people who are putting down a lot of money, they're not participating up here. It's probably like the OK coin, Binance futures kids, right? Everybody trading on like 100x leverage and stuff, all wanting to get rich and stuff. And of course, this is the Wyckoff process. Keep in mind that the institutional players that did buy down here, right? And institutions buy down markets. Institutions buy down markets. So this is where they're long, right there and there. They want to make money from this. So they're going to push it up. Then, we got this market moving higher and higher on a daily basis. Once we clear through these old all-time highs, this is now open air here. There's nobody up here, right? Because we cleared through the old all-time highs. There's no sell orders up here. And, you can start throwing on Foggenbaums, and there'll be like mathematicians guys go and say, don't sell here. Foggenbaum's going to come in here. Don't sell here. Foggenbaum's going to come in here. So the point being that price gets pushed up because there just isn't that many sellers. All the buyers bought here. But you know who is coming in on the buy side up here? The public. The public buys up markets, and they don't have the purchasing power that the institutional players have. So you can see that on the profile. This is a concept that we teach in our level 2 program, P's and D's. And if you see the letter D, hopefully everybody can see that. Looks like a letter D. Remember, half of what I do as a technician is just remind you about grade 3 English class. Can you see if you went up to the chalkboard and you Mrs. Jones, actually no, my grade 3 teacher, she had a funny name. She was British. Oh, I can't remember her name. I remember my grade 2 teacher. She was Miss Pierpoint. She had a really sharp nose, and everybody thought she was a witch. My grade 4 teacher, I can't remember her name. She was a real funny character. Anyway, since I can only remember my grade 2, W's, M's, P's, and D's, right? Miss Spearpoint would call Brian up to the chalkboard, draw a D on the chalkboard, Brian, and show everybody your wonderful calligraphy. Well, that's basically what that is. And what this says is really there's nobody participating up here. Where is everybody long this asset? They're long from here. So if the market was going to calm down, and unfortunately the market's just going to go back to where everybody did buy and where everybody is long. Keep in mind, there aren't that many people long up here. Where is that likely to be? That's top of value. Number 2, this is actually a trading setup that I used to actually trade when I was an official prop trader, funded by Top Step. I don't know. Michael Patak and all that kind of stuff. Johnny Hoagland. I affectionately called it, I named it my bot setup, because when I trade like a robot, I trade like a machine. And really, the interesting thing about this is off of this A, B, C, D, it's a very normal harmonic pattern. You'll notice that we have an empire top, 3-bar empire top fractal, but we also have a 5-bar, 1, 2, 3, 4, 5-bar fractal top. That is huge. Turbo prop trader. There you go. A 5-bar fractal, that's nasty. If you look at like a maple leaf, right? This is theoretically how nature works. And the 5-bar fractal, that's the shit. Let's see if I can show you. You see how there's a whole bunch of little pointy points here? So the point is, like the 3-bar, I don't mind that for a trade setup, but you'll notice, like in nature, you'll notice that you can actually go 1, 2, 3, 4, 5, right? So you have like 3 up and 3 down. So the point here is, I thought it was really interesting when I looked at this and I was duding up these levels this morning. Notice that 5-bar fractal, its sell level is the buy level, which I thought was fascinating. Basically, they are the same level. That's not a good sign, folks. If you're a bull, that's not a good sign. What I will say, saving grace, hopefully, hope. And in a weird sort of way, actually, no, I would prefer this not happen. Because frankly speaking, what I would prefer is they just rip the damn Band-Aid off, get it done, and then we can start getting on with this sort of cleanup process and setting the base for the next bull market. While we're still going through this, and I went over to Europe in 1718, and what kind of bugged me about that experience was everybody just sort of got comfortable. All right, you know what? $6,000's the floor, and heard lots of people talk cost of production. That's $6,000. Okay, so yeah, that must be it. And all of a sudden, in the fall of that year, boom, the price fell in half. Crunch. And I can tell you, almost everybody that was sort of like, yeah, I'm a Bitcoiner, this basically broke their hearts. And by the time we actually got into this environment, and I've told you guys this repeatedly, most of the influencers in the space were gone. And whatever influencers there were, actually, they were bearish through here. Terrible place to be bearish. So if anything, and you've heard me talk about Mr. Simon Dixon. I think he's an excellent, just really, really simple message, smart ass fucking trader. It's going to probably own us all before we're done, but he's rather anonymous, so he doesn't really care what the public thinks of him, which I respect. I don't see him as a huge shill, and a lot of this sort of people in crypto, man, they sure come across as horrendous shill sometimes. But notice this guy here, right? 80%. That is basically Simon Dixon's, the Simon Dixon line. If Bitcoin corrects 80%, don't short it here. That's stupid. If anything, force yourself to come in and buy. So if we fast forward to today, that is reason number 3. There's 80% correction off of the, and what a coincidence, 69,000 even. Didn't anybody notice that? I'm surprised nobody in the public noticed that. To me, that's a couple of hedge fund managers that are like, hey, Bob, check this out. I'm going to print 69, my favorite number, as the top in Bitcoin. Watch me. And he just goes in at 69,000,000.001. He parks an offer of 5 million coins. And that way, there's no fucking way that market's going through that high. To me, that's exactly what that says to me. That's, in fact, that's a typical Brian 12-year-old humor kind of print. And I get the impression, I mean, the irony of it all is I don't even think most of the public and most of the people in the public even know this. And it's so frustrating. Did you know that the only reason why crude oil prices did this in 2008, George Bush Jr. and all their fucking cronyism, the only reason why this did this, it was a running joke. There were 2 hedge fund managers on Wall Street, and they placed a bet. And the bet was, could they get crude above $200 a barrel? And they ran it up to like 130, 140, 140, 140, and then they just couldn't push it any further. But that's the only reason why this happened, folks. It's the only reason. So try and tell me that the capitalists are actually working in your favor, are your friends, or are the good guys. They're not. They're just as evil as, like, the rant that I started off with. It doesn't matter whether you have a left-leaning politician, commissars, they're going to fuck you. It doesn't matter whether you have a right-wing politician that's a totalitarian dictator, they're going to fuck you. Why? Because these are humans. And as the Romans used to say, you either fuck or you are fucked. So who are you? And that's serious. That used to be the way. Of course, they wouldn't use that colorful term, and that gets me in trouble with YouTube and all that wonderfulness. But literally, in the Roman household, you were either the penetrator, and that was supposed to be the father figure, or you are the penetratee. Is that a word? And that could be the young boy, it could be the young girl, it could be the wife, it could be the consort, it could be the maids. It was actually the household's response, the head of the household was responsible to penetrate everyone and make sure they knew who was boss. So don't kid yourself. This stupid human species has not changed a hell of a lot. And what I see in our society, what's going on right now, is there are some penetrators over here in this camp, and there are other penetrators over in this camp. And right now they're saying, I penetrate you. No, I penetrate you. And all of a sudden now we're on the brink of World War III. So make no mistake about it. Nothing has changed here with these stupid humans. It's all the same crap. So frustrating. Anyway, there's a nice tangent for you. Wow, that was politically incorrect. Kaboom! Sorry, everyone. That was terrible. But you got to understand, in reality, it's you are either taking advantage of, or you are being taken advantage of. And in a weird sort of way, actually, I don't mind being taken advantage of, because I think I've told you, like I've been visited by the other side. I know that it exists, and it's so I know that when my time's up, there is a reckoning, and I would rather stand in front of my maker and say, look, if people took advantage of me, well, so what? Turn the other cheek, all that. At least, look at all those people down there. They actually think that I did a half decent job and I helped them. And that's what I'm going for. You all know my story. So anyway, good old Simon Dixon line. And I was making a joke, I wanted to sort of play this as the Mason-Dixon line, but then there's some people I realize in our society that if you say a name like that, it actually it brings up bad thoughts and bad feelings. So I can't. I shouldn't even be saying this right now. I should let's call it the Simon Dixon line. Forget about the Mason Dixon line reference, and that's reason number 3. So we've got a volume profile. We've got the bearish bot that's working away. It's our objective, 12,000 and change. We've got the Simon Dixon line, 80% correction. Just get in there and buy it. I actually had the privilege over the past year, and I think actually I've really driven it home. I worked with 3 different TRI site members, Nick, Derek, and Ben, doing our weekly crypto show. And we even named a concept, one of our co-hosts, Ben. We call this the Benkoff check, right? Stands, of course, for Wyckoff check. The Wyckoff, this is basically the Wyckoff markup process. And sadly, folks, this is actually the Wyckoff markdown process. This is the way capitalism works. They mark assets up. Institutions buy down markets. Public buys up markets. Institutions make money. Public loses money. And lo and behold, there comes a check of that level, which just so happens to line up with our top of value, with our ABCD objective, with our Simon Dixon line. just basically a check of previous bullish market structure. And you can kind of think of it also too, like there are higher time frame players. Yeah, I suppose I could. Now, the interesting thing is there was no M up here. So it really left me sort of scratching my head. How would I draw Foggenbaum levels? I don't think I can actually do this off the daily chart, which is kind of odd. Like off that somebody just asked in the hangout here, could you draw some foggy boggies off of this? I haven't worked with him long enough to understand what's going on here. If there's no M up here, see how there was a pretty well-defined M up here. So in this particular case, I could go boobity boo and then boobity shmoo, 2.618, and then 4.669 all the way down, negative number. I don't think that's legit. So I was a little surprised, to be honest with you, last fall that we didn't trade to that Foggenbaum level. That did surprise me a little. But this, this in itself should be good market information. So what is the market actually trying to say to us here? I did find it interesting that when we did pivot back up, right, off of that W, notice 2.618, that looks like that was pretty darn respected. And then notice 4.669, man, that's chaos if I've ever seen it. So the interesting thing about this image, and actually this sort of ties in with this image as well, is what I usually find happens is that the market will go up to a chaos level. It will sort of ask, okay, well, is this really where I'm going? Maybe this is a midpoint and I'm going up to the next chaos level, which is like 8.77. Well, yeah, there it is there. So why is that not showing? Oh yeah, way up there. And I think you can kind of see here. Notice how chaotic price got. Wickedly above, then wickedly above, then wickedly above, then below, then above, then below, then above, and then up. And then notice, look at where the pullback came to. You see how what we really did here was we, here's 2.618. So we went up to this chaos level. We resolved higher through that. So we kind of went woo up into here. The market said, you know what, this is too far, too fast. And then we broke back down. We checked the last chaos level, and a bunch of chaos came in here. And then we went screaming up. So interestingly enough, had this really been a serious bull push, we should have rallied our way up into this 877. Which, interestingly enough, is sort of all that kind of talk that you heard from the this time it's different kind of people, right? So I wonder if, honestly, everybody was getting ready for this. It looked like the whole market was getting ready, but off of this chaotic bottom, the market just could not accept above there. It just was too chaotic, and then we just puked right out the other side. Like, just not like this to me just looks like it was just exhausted. We just ran out of steam there. And probably if you looked at the momentum indicators, my hunch is once we got up into here, we probably were starting to spit out things like bear divs and stuff up there. Yeah, so you can see this high here, even though it's higher in price, you can see the momentum was not at a new high. And then RSI, not even remotely similar. Interesting how Willie tried to get up, didn't even get up into overbought. So this dead cat bounce, it exhausted itself. And then this last move right in here, my hunch is that probably set up just the most wickedest divergence. So that was up into here. And yeah, so you can see push here. That push up to new high, trying to accept above that 4669 array. We're ready to rock and roll. We're going to head up to 877. That was on that momentum push right there. Basically nothing. You see how we're nowhere near Like that is about as bare div gets. And this is what kills you, right? Is there are people that took this course. They actually paid me money. I don't get this. And they literally said, RSI divergences, nah, it doesn't matter. Just go and buy. Like, and I got to buy my gold plated steak. And the only way I'm going to be able to do that is you got to get in there and buy. You got to buy my newsletter. You got to buy my coin. You got to buy my referrals. You got to go and actually maybe that's even the worst, right? Is, you got to go out and take out $1 million mortgage on your house and you got to go buy. And if you use my referral code, then I get a percentage of whatever it is that you do. So if you go and throw $1 million at the market, hell, I might even get like $10,000 commission off of that. Terrible. And what's so sad is it is like literally the hallmark of this damn human experience. Is, when the market's ratcheting up like this, the guys who are the influencers and they got you all to buy, and of course, holy, look at all these referral income. Oh my God, man, and I'm going to move up to a 5,000 square foot place. And I'm going to start driving a car that has like a $5,000 a month lease payments and stuff. And by definition, they have no choice. They have to keep the shill going because it's not like they can just walk away from that lifestyle. All of this sort of YouTube subscriptions certs. And this is the one thing I absolutely hate about the capitalist system is that, we used to have this expression when I was a stockbroker. You eat what you kill, but that means you kill what you eat. You kill nothing, you eat nothing. Now, does that set the salesman up to do what's actually in the client's best interest? Yeah. I mean, and that's the worst part about it. My old man, he used to always say this, Brian, whenever you think that you've hit the limit and there's just no more money to spend and you've got enough money, there's always something that costs a little bit more. And I hate that about this stupid world. So guys who are stinking rich and, just going out and having a nice dinner and a nice bottle of wine and stuff, they could easily afford that. So how does the system, bilk them? Oh, well, sir, if you any yeah, I don't even know how the script goes, but if you are half the man that you think that you are, your steak has to be wrapped in gold. What? Yeah, well, all right. So, and Andre makes a perfectly good point. Remember, I told you we're sitting there where there's one group of penetrators and they happen to have circumcised penises. We all know who they are, who are standing across from another group of penetrators who, ironically enough, their also penises are circumcised, which is sort of ironic. And the funny thing is they're even they're even calling each other, even though they all have circumcised penises, they're all calling each other non-circumcised penis haters of circumcised penises. You know where I'm going? Everybody should understand exactly what I'm talking about. Hey, I didn't say anything. I just said circumcised penises. You all should understand what a circumcised penis. Who has penises circumcised? Anyway, and Andre, I don't know whether you're aware or not, but there's an interesting story about why they circumcise penises. So go figure, eh? Why does the British Crown like the color purple so much? And then that goes to, why is there an altar in the basement of the JP Morgan house on Jekyll Island. Some weird shit that goes on in this world, folks. Weird shit. So anyway, I mean, if anything, what I kind of like is I just like to be a spectator. Hey, oh, there's a name, Constantine. Constantine, that's a cool name. Actually, Istanbul was Constantinople. Istanbul was Constantinople. And actually, it's interesting. The fall of Constantinople and they changed to Istanbul actually was right around the basically the last massive sort of great reset of our civilization. It'd be interesting, and we're long overdue for one of those reset events. So. Wow, Brian's gone off on a tangent here today. This is what you get when I put the question document out. Okay, so does anybody have any questions to ask Brian and the broiler chickens? And it's like, nope, crickets. All right, well, here goes Brian. Let's see what the hell's going to happen. So, all right. Where was I? Oh, yeah, I guess we were just talking a little corn here. Okay, so we were sort of walking through all the reasons why I think the market could use a bit of a pause here. So we went through them sort of one at a time. Actually, one of my favorite, and I can actually say this, and that would be super cool if we had like trader bobblehead action figures. Because one of my favorite trader superheroes that I've met in my entire career, and I haven't met too many traders I really respect, but Johnny Hoagland. This would basically be him and the volume profile. So, and actually, if you ever see any of my charts and you see this icon, that's my icon for Mr. Hoagland. I know it's supposed to be a tech reference, but if you ever see on my charts that image, that's Johnny Hoagland. So that's him right there. It should be interesting. The bot, who that? Nobody ever really taught me the bot. It was sort of something that I learned on my own, and I just pieced together a whole bunch of different concepts. I used to run a service called the Weekly Commodity Trend Survey, and I used to draw these ABCDs all the time. And I used to always be like, how the fuck are you supposed to trade these goddamn things? And then one day I stumbled upon a guy who was like, okay, we'll take the ABCD, break it into quarters, and you got yourself a nice little 3-to-1 risk reward setup. So there's that. Then, as I said, the Simon-Dixon line, I think it's an excellent reference. Anytime you see an asset correct at 80% off its previous peak, that's your time to start in there and get accumulating. And I'll tell you, the guy that I was making fun of there just a moment ago about going and buying tops and no, you don't have to worry about divergences, he and I actually made a video right here. Now, why would I be like, you know what, this is an absolute no-brainer, go and buy this damn thing? Do you see the Simon-Dixon line right there? And he and I actually made a video. And probably the next time I actually get a weekly W in Bitcoin price, I'll probably reach out to him again and say, hey, you know what, for old time's sake, let's go do another one of these. Because that's probably what you have to wait for before this thing is actually investable again. So that's Simon-Dixon line. Notice Simon-Dixon line right here, right? And I always tell you guys this, like live this, learn it, commit it to memory, right? And practice. Anytime you see a market go beyond 78.6, how many times have you heard Brian say, God damn, market goes and usually W's out right off of that damn 78.6? Drives you crazy. It happens like clockwork. So that's what you want to wait for. And you want to wait for Simon-Dixon line. You want to use reload zones like Beamish. Of course, he loves his 78.6. And that was another one of the reasons that I sort of had here was There's Brian 78.6. You know how much he loves his 78.6s? That's at 17,000. Don't know whether I really want to come in here and start accumulating off a mountain. Mountain, it seems a little bit expensive because keep in mind, I think ultimately, this is remember I'd start off the conversation today. I say, what's the difference between these assets? The best part about this, I mean, no offense to Facebook, Netflix, Amazon, Google, their stock technically is worthless. And you don't want to see something shocking. This is what freaks you out when you look at this stuff in earnest. Who can tell me if let's use Netflix. If Netflix goes into bankruptcy today, they do not sell another subscription. They have to settle up, and the shareholders get what is called the book value of the asset. How much is a Netflix shareholder actually going to get? Settle up, business is over, going to sell everything, and just return the actual assets to the shareholders. How much does a Netflix shareholder get? Keep in mind, the stock right now, what the hell is the damn stock? I can't see. Where's the price? Let's. Well, there it is down there. Where the hell's the damn Netflix? Oh, I'll do it over here. I don't want to show you because it'll give the answer away. Actually, is it that high? That's pretty good. I thought it was going to be a hell of a lot lower, to be honest with you. There are some of these companies, it's just like, you got to be kidding me. Like, I hate to say it, but like everybody loves that Tesla. Go look what the book value of Tesla is right now. Uh-oh. But NFLX. All right. So I'm going to go buy the stock at $190 a share, which is actually pretty cheap. But let's go see if they go out of business and they got to wind everything up, what am I actually going to get for my shares? Survey says $39.50. That is the book value of one of these shares. $39. Andre, so almost half of your price. You see that? So what's the price of book? Almost 5 times book value. Oh my God, you're crazy. So, I mean, right now, I guess 5 times book, that would be 20 cents on the dollar. You're close, Joshua. Yeah, well, I mean, okay, let's look at good old Ford Motor Company. Book value per share is $11.22. So that's not bad. $14. So that means you're buying the company at $1.26 relative to the actual hard assets. So that's actually not bad. And it's actually got like a lot of cash on the books, $9.94. Now, the problem, of course, is holy shit, look how much debt they're carrying. And I hate investing in companies with any kind of debt. I bought that stupid little pharmaceutical company. It was supposed to be a VCIMer. And the first thing that they went and did was a convertible fucking bond to finance their development of this pharmaceutical drug. That's the worst thing you want to see. We don't want debt. No debt, no debt, no debt. But I did the Korean barbecue trade and I said I was going to stick with it. And the stock has just done nothing but crater as the interest rates are skyrocketing higher. You don't want debt. Debt is bad. And, something like this might actually bankrupt Ford. I mean, how bad is bad going to get? If they have a huge bond that's coming due and they just don't have the money and nobody will finance them, the company might just have to go under. That's the kind of environment that we're in right now. This is serious shit, folks. So relatively good price to book, but I do not like that debt level. That debt level is uglier than shit. Now, just out of curiosity, if they break up, so, the interesting thing is if they break up Ford, you might not even get that book value, right? Because the debt holders, they'll go and gobble up that money quickly. But just out of curiosity, let's see. I don't think Tesla has that kind of debt load, so that's not so bad. You can see they're starting to climb the debt ladder. So debt to equity is pretty low. Book value per share. Holy Shiite Muslim. Stock's $870 a share, and the book value for each share is $33. What? This is crazy. What the hell's going on here? Hoagland, Johnny Hoagland. And if you want, Gary, come on the site and we share John's market brief. We have a futures day trading room for our veterans. And so we're in there every single day chatting futures. But Chris actually used to post the Top Step daily sort of good morning video. And I like it. I love listening to John. John's very down to earth. He's very real. Thanks, dude. I'd appreciate it. Chris said he'll do it in the future. It's a great way to start your day because he's like, I got 30 years, but John, he's got like 40 plus years. And his dad used to be a floor broker. So basically his entire life he has spent on the floor of the CME. So you think I got experience? I don't have any experience holding a candle to John. But I do appreciate that when I come on, he goes, Mr. Beamish, good to see you. So at least he still thinks highly of me. But point of the matter here, 26 times book value. Holy Shiite Muslim. What are you, crazy? I don't know how people are investing in these companies. It makes no sense to me whatsoever. I like to invest in a company that maybe at best is trading like 2 times book. Really, I like to invest in companies that are trading at or below book. So then that way, if they do actually go and dissolve the company in bankruptcy, actually the assets are worth more and you get more money. And in those scenarios, very rarely do the companies ever go bankrupt because they're trading less than what they are. And a lot of times, white knights will come along and go, holy Jesus, I'm just going to buy this thing up. It's a steal. So anyway, point of the matter here is, I don't know how people in their right minds can invest in companies like this. This is crazy. I mean, this is absolute insanity. And this is what really concerns me about what Alan's done here with his Twitter buy, is that he's gone and leveraged the shit out of whatever shares that he has left. And you can see he doesn't represent a huge chunk of insiders anymore. There's not really that many insiders that own this stock anymore, which in itself should be concerning. That's not a good sign when you have such low insider ownership. So there's no way in hell, there is no way in hell I would ever consider buying something like this here. Just would not do it. Not with 100-foot pole. Just couldn't do it. No, couldn't do it. Sorry. And what I think's happened here, folks, remember I said through those Jupiter-Saturn crosses and through the conjuncts, you get these long-term cycle pivots. And I get the impression, where's that last one, right? Look at this. This is insanity. Basically the stock was nothing. It was like, $10 in 2012 over to $1,200. How on earth does somebody in the public justify buying this? What this image is? This image is buying Nortel in the year 2000. And, it was like $120 a share and it had no earnings. None. At least this thing has some earnings. It's trading at a PE. These PE ratios are insane. But what I found interesting about this is, price to book. I said, typically I like to buy a company that's trading at like 2 times book. Then that means that quite literally I could look at this thing. Maybe I'll be generous and look at it at 2.6 times book. Well, that's 1/10 the current price. 1/10. So I could look at this thing at $87 a share. Remember I said that I wondered what the hell that Allen guy was doing when he literally mortgaged his stock. And if he saw the stock drop below $500, he could have that whole debt margin called away from him. and he loses everything, his old Twitter thing and all of this Tesla stock, and it's gone. That to me seemed like a really, really dumb decision. I don't know why people do this. He's like, the guy's like super insane rich. He won. He won the game of life. And he's going and putting his neck in the news and potentially having a situation where, I think I heard like Bill Gates and stuff is like loading up on the shorts to this to try and break this thing. And notice the long-term moving average is sitting at $400 a share. So if they lose this level, and by the way, what are we supposed to think if you ever see the market smiling at you? Is that a good sign? Anyone? Bueller? All right, I gotta get a chart of this. ESLA. Boom. What's interesting about this is we went, there's the smile, and then we had a dead cat bounce. What was fascinating was on the dead cat bounce, we actually had an outside upside key reversal. And this produced actually a risk-free trade on the rally for the actual option spread trade. Now, had you taken that, you better gotten that free spread trade, and you're just sitting there risk-free, because this thing has not broken out through the top here. I mean, I have no idea what's going to happen here, but looking at that fundamental story, holy crap, that's crazy. And then, of course, look at that nice hand, what is that? Nice shooting star there. Ugh. I mean, this just looks like a mess right now, but, just the fundamentals alone, you should be going, oh boy. I think there are better places to put your money to work. So, all right, it's getting on 1:00, as you all know. I'm gonna go give the boy an awesome afternoon, drive him around the Lower Mainland. We'll probably go look at Mount Baker. Often great drive. Actually, I think the weather's it's okay. Should be an okay day for a nice drive in the countryside. So I don't know if there's anything in particular. Of course, I did talk Bitcoin, and it's awfully tough to be too rah bull when you're staring at all these, kind of nasty looking chart patterns. Actually, I was, going through that 1 through 5. So here you can see sort of the same thing. If we do sort of what's cheap when it comes to investing in stocks, is things like price to book and price to cash and PE ratios and insider ownership and debt to equity levels and all that kind of fun stuff. Question is, how do you figure out fundamental value in a commodity? And that is where we get into conversations like about cost of production. What does it actually cost to produce a Bitcoin? Now, I do understand. And this is kind of it's a floating debate, because sometimes when I use these numbers, some people say, well, you can go to electricity companies and you can actually haggle and lock in long-term rates that are extremely cheap. Then I have other people who say, well, with the rising natural gas prices, actually those numbers are really, really too low, Brian, and you should have them much, much higher. I'm going to just stick with this model for now, as I noticed that it worked pretty darn well to help us. When we were going through the last sort of halvening, getting ready for the last halvening cycle, there is the halvening event there. The S7s and the S9s and the S13s were all snugly up against this number in here. And my hunch is that it'll be a combination of two things. It'll be a combination of us coming down into these levels where all the miners are mining Bitcoin and what the cost of those rigs are, not the older generation ones. Older generation ones, you're probably going to see that they're underwater, and what will end up happening is the people that are running those older generations, S7s, S9s, S13s, whatever, they're just going to simply have to turn their machines off. It's just that simple. I don't know whether this is even cutting edge. Are we at the point where they've developed S21s yet? Now, with this whole sort of sickness, nonsense, craziness, has the industry really? I'd be curious. Would the sickness actually affect Moore's Law? I think Moore's Law would go, so what? Who cares? Doesn't make any difference. You know, I've made the argument that quote unquote inflation is actually nothing more than the banker's tax. The inflation that you're enjoying right now is a direct result of all of the 2008 bonds that should have never been issued, that the issuing companies, Goldman Sachs, Merrill Lynch, JP Morgan, Chase Manhattan, Wells Fargo, Bank of America. I mean, it goes on and on and on and on. Those companies actually should have been forced into receivership. We should have gone through a Great Depression. The bubble should have deflated. A dollar should still be worth something. I've talked to you guys plenty about my 6-inch tuna fish sandwich from Subway. Used to cost $2.75 back in the year 2000. Now cost $8, $9. Why? Well, they took all of those bad bonds that should have never been issued. The companies that issued them should have been forced into receivership. We talk about price to book value. Something like a Goldman Sachs should have been forced into receivership. And in essence, all of those bad bonds, the people that invested them, they should have basically driven the companies into bankruptcy. And in bankruptcy court, they should have gotten whatever was left. You can see the book value per share here of Goldman Sachs. Interesting how, isn't that interesting? This Goldman Sachs, notice it's trading basically at book value. So, interestingly enough, with all those bad bonds and all that kind of stuff, basically in receivership, all of those bond issuers should have been paid back. It's just that simple. And this company should have disappeared. It should have just gone off the board. But, oh no. How many U.S. Treasury secretaries are former employees of said Goldman Sachs? Does Goldman Sachs maybe own the U.S. government? Oh, I think so. This is actually where we get into Andre and his tinfoil hats and, why are the Russians actually doing what they're doing right now? And remember, this is all about who penetrates circumcised penises and who gets penetrated. It all comes down to that. So you could argue the price inflation that you are enjoying right now is really just the aftermath of the penetration. That's all this is. And they keep redoing this over and over and over about once every 80 years. It's pretty simple. Hey, Greenspan himself said that this is the process of confiscating wealth. Same thing. It's really nothing has changed. Who do you think is a major shareholder of a firm by the name of Goldman Sachs? Do said Rothschilds have circumcised penises? I haven't been racist here, have I? I'm just stating facts. I haven't said any racial slurs, have I? I think I've been relatively positive. Hank Paulson pushed for 100% payback of AIG CDOs. He was president of Goldman. Yeah, well, Hank Paulson, yeah, he was the U.S. Treasury Secretary, right? Yeah. I mean, it's stunning how corrupt the whole damn thing is. What is really interesting, though, like what you guys have to understand is that we're playing the game from sort of outside the fishbowl. in reality, there's sort of like there's different layers of this game. And what's fascinating was the whole story of Lehman Brothers, because Lehman Brothers would be kind of like like in crypto, you got like Danny and Magic Internet Money, and then you got like Barry Silbert, right, and his whole sort of entourage. You got Richard Hart. Actually, we haven't seen Richard Hart cry, eh? So that's the one thing that actually is disappointing in this cycle, is we never did get Richard to cry. But anyway. So, in the crypto, and then you got guys like Kobe, right? And his crazy NFTs make him billions of dollars, just on total fluff. The ape thing and all that. Anyway, the point being that there's like an ecosystem, and you got the major players, and then of course there's all us like little schlubs that are all just sort of zooming around doing their thing. Like Sjord loves Luna, and that Mr. Kwan guy. He's another sort of player in the game, right, and all that. Well, in the Wall Street arena, it's the same thing. They're bigger, older dudes. So what was fascinating was Lehman technically was a circumcised penis house, and they didn't play by the rules. In that, in 1998, there was a long-established firm that got caught because of the Russian default. Oh, what a coincidence. Russia just always seems to be on the scene right when these damn financial catastrophes happen. Eh? Here we go again. But Russia defaulted, and long-term capital management, a whole bunch of firms, they all got swept into the default. And Lehman Brothers wouldn't play ball. They would not give them an ounce of room, and as a result, long-term capital management went under. You guys remember when they were, just even recently, there was a hedge fund guy, living in the Hamptons and sort of connected, and he was short. I think it was GameStop or AMC or one of those stocks that went absolutely nuts to the upside. But because he was part of that sort of old boy world, the sort of parent fund just said, man, you know what? We're not going to margin call you. No big deal. So what? Then there was the guy over there in China who the London Metal Exchange guys, they tried to short squeeze him. And he was just like, fuck you. I don't care about your stupid margin calls. Go screw yourself. And they were like, oh, yeah, okay. I guess you're a big enough fish that we can't force your hand, which is kind of funny in itself. So what you need to understand is that there are like different hierarchies in this game. And the reason why Lehman went under was because they wouldn't play ball with long-term capital management. And then as soon as somebody found out that Lehman was on the hook, they went after them in revenge, for lack of a better term. So make no mistake about it. Just exactly the same sort of ecosystem infighting and sort of reputation, dev team this, dev team that, in crypto that you guys are all familiar with, Danny and Magic Internet Money, Kobe and all that. Exact same thing in the higher markets. They're just bigger guys with bigger pockets, but it's exactly the same thing. And so these guys, right, you could argue that they're exactly the same thing as sort of, some they tried to rug pull, and these guys are so big that they were like, you know what? We're going to get the government and the pseudo body that runs the government, the Fed, to simply take all these bad bonds and just put them over on the sidelines and print a whole bunch of money to replace the bad bonds. Then instantly, of course, the money supply explodes higher, a la your inflation here. And then these cocksuckers have the audacity, and they've brainwashed like politicians in my country that don't even understand these high stakes games that are going on in the world. They're like, they've been brainwashed, and all that comes out of their mouths are, well, the reason why we have inflation is Putin's war in Ukraine. What? Makes no sense whatsoever. I mean, it does explain the premium in energy prices, but oh, by the way, Canada is the second largest holder of energy in the world, and with these high prices, this should be an absolute boom for our country. Oh, but turns out our leader actually doesn't want to bring that oil to market. That's why you have the high energy prices, not what's going on in Russia. It's so sad that that it's taken Mr. Putin has actually had to say, you know what, enough is enough. And I personally think that this is nothing more than the old world, countries like Russia, saying, hey, you know what, we better do something here, or our industry is going to be put out of business, and all these people are going to be driving around in electric cars. So half of the reason why I think Russia's doing what they're doing is for that reason alone. But anyway. Blah, 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 blah. Rant, 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 rant. I'm probably just painting a big bullseye on the back of my head here. Now I'm sure some circumcised penis is going to come up and shoot me. But oh well, it is what it is. All right. I think we'll probably leave it at that. I don't know whether you guys got any value out of that at all, but hopefully that was kind of a fun little rant. What I would probably say to everybody right now is, and probably most of the people that are watching this video, you're already sort of in the know. You know, there was a gentleman who lived about 300 years ago. If you haven't heard this before, it's always a good reminder. There was a gentleman who lived, I can say just about 200 years ago now. And he put out a forecast for when to participate in the market and when to sort of just, you know, play it cool. And first thing is you better make damn sure you pay your subscriptions though. That'd be awful if, sorry Brian, hey, you can't get in on the website. Hey, look at that. So they didn't throw me out. But on our blog, actually our blog I think is free though. So I've told you guys this. I make reference to it a lot, but it's about the easiest way for you to possibly understand the market. Just simply put, when to invest, when to cool your jets. And unfortunately, after 2019, we've been in our cool your jets kind of mode. And really, you know, the irony of it all is that they threw a whole bunch of free money at the market. I get the impression, and that's sort of what this image is here. Does it not make sense that, you know, here is that health crisis. Here is actually when that peak was supposed to come in, right through here, which is scary. There's the health crisis right here. Does it not make sense that all they've done is they've just come in, and this is on an adjusted chart. So this is taking into the account all of the money printing. All they did was they came in, and of course they gave everybody stimmy checks. Interest rates were falling because that was the very end of that interest rate cycle. So people were borrowing against the equity in their houses and doing lines of credit. So that was more spending. Of course, you've seen the stupid, like just pure idiocy of the Canadian real estate market. I would say rural Canada is not so bad. This Vancouver market is a luxury market. It sort of caters now, I suppose, to the international sort of elite in a weird sort of way. This city in particular has actually been cordoned off. So like North Vancouver, for instance, belongs to the Iranians. It used to be Richmond, used to be Chinese. Now Richmond, Vancouver, and Burnaby, it's all Chinese now. Surrey is India. And what's really interesting is you can actually hear in Surrey the Indians starting to complain about the Afghanis and starting to complain about the Pakistanis and stuff. So they're even becoming racist amongst themselves in the different sectors of the city. But in essence, Vancouver is the most perfect whore you've ever met. She is really, really good at selling herself. Lips getting a little bit loose, might have to get into surgery, tighten things up a bit. But Vancouver is an absolute perfect whore. There's no way in hell I'd buy real estate in here. I just wouldn't. That's just ridiculous. I do remember when the time to buy real estate was back in the late 90s. And it was funny because even then, in the city of Surrey, there was a girl that I used to work with, and she got married, and their family bought her a house in Surrey, and she, of course, didn't want to live in Surrey. And unfortunately, the marriage didn't last very long, so she wanted to sell that place, get out of there, and she couldn't find a buyer. She literally no one would buy the house. Now, that house probably actually is 10x that price because it's all Indians. It's not Canadians that live there. These Indians literally come in straight off the boat, right? Or straight off the jet, I guess. So like I said, because it is one of these funny luxury markets, the problem is the overdevelopment. It's just gotten ridiculous. And I've often lamented that at the end of the Cold War, we've now transitioned into this Asian boom bust society. I've talked to you guys lots about how China, basically the bubbles burst. The credit market cycle is over. Jupiter Saturn crosses happen. You all know the long-term mortgage rates. The bubble has popped. So now the question here is, what happens to a luxury market like this? My hunch is that basically the top was put in there a year or so ago, and we're now going to spend the next 15, 20 years. But because it's a luxury market, my hunch is we spend the next 15, 20 years just going sideways. But you can see it, whether it be something like Bitcoin, whether it be something like the NASDAQ, you can see that, like I said, they injected just a whole bunch of stupid idiot money. The question ultimately here, was this a distribution? Like, was the smart money? Remember, I'd said smart money buys down markets. Smart money buys down market. Smart money buys down market. Was this nothing more than just a distribution into, that Plotny guy becoming, all of a sudden now he's a stock expert? Wall Street Bets, all of a sudden they're stock experts. That Kevin guy didn't know what the hell he's doing in the market, but now all of a sudden, because he's a YouTuber and he's all of a sudden an expert, people coming on saying, don't worry about bearish divergences. That doesn't mean anything. They're experts now. Does that not all scream of distribution? Like they were distributing all of this stock and all of this equity and stuff to the public at inflated prices? That's what it feels like to me. And of course, if you follow along Mr. Benner, you would say, well, that was exactly what was supposed to happen. And we don't actually trough. Here we are, 2019. We don't trough until actually 2023, which actually aligns perfectly with, China's Belt and Road Initiative into 2025, 2026. That also aligns perfectly with the next Bitcoin halving sort of fundamental window. It also corresponds perfectly with Bitcoin 4-year cycles. So put it all together, folks. I just don't think there's a hell of a lot of a hurry to go and throw a ton of money at the market here for the next year or two. I think what was happening right now is we are going through the distribution phase, which is painful, takes a long time. As I said, this next 6-8 months is, it's May. So basically the next 8 months, they're going to be a tough grind here. You just got to get through it. Keep your head level. Don't do a bet like what fucking Mr. Allen is doing, where you go and leverage yourself to the tits, and then all of a sudden the damn fucking market collapses and you get everything taken away from you. I've often actually conjectured that Mr. Tesla reminds me a hell of a lot of a guy named George Westinghouse. And Mr. Westinghouse actually was the guy who sort of brought the modern electrical grid as you know it into existence. And he had it all taken away from him because he leveraged himself too hard through a debt cycle. Interest rates went spiking up, and the banks just came in and foreclosed on him and took everything from him. So don't do what Donnie Don't does. Pay off your debts. If you're going to have debt, fine. It's too late now. but go and get like a nice long-term mortgage that's not callable, and you can handle your monthly nut. Because keep in mind, that monthly nut has got to be serviced. Or these cocksucking banks, they're going to come and try and steal everything right out from underneath you, just like they did in 2008. The difference here, though, is that the Americans aren't vulnerable. A country like Canada is insanely vulnerable, ridiculously vulnerable. And that's actually where I think the tragedy really happens this cycle. So go figure. Put it all together. I don't think there's a huge hurry to do a hell of a lot. Do see Stewart is there on the in the lounge again. If we're really lucky, maybe we can get Stewart to come on and do a nice little update of what's happened in crypto land through the weekend. Like I said, I mean, I'm not the best person to listen to sort of what the inner workings of DeFi and all that. So if we're lucky, maybe we can have him come on and give us a presentation tomorrow. Mondays are his day. He was moving, and I know that his nanny is a little bit sort of sketchy now for Monday. So we'll ask really nicely, and hopefully he'll give us a nice presentation of what the hell's going on in DeFi land here tomorrow. So, well, what do I tell you guys? The one good part about all of this is the one good part about all this. is once we're through this, now they might rip the Band-Aid off hard here. Rip into this May, June. That might be what happens. I don't know. I've told you I've got plenty of reasons to look for levels down below. Usually, unfortunately, when it comes to levels, though, is you never really know exactly when they're going to get hit. You know, the typical move in these markets is usually, bear markets, usually it's roughly 18 months. They want to rip the Band-Aid off right here and then just go sideways for a year. I could see that. That wouldn't shock me. You can clearly see where Brian's interested. And this is not voodoo. This is actually extremely keep it simple. Don't overthink this stuff. Keep it simple, stupid kind of thinking. Where would Mr. Hoagland be interested? Where is Brian's bot levels? Harmonic, where would they be interested? PRZ, Scott Carney, and all them. Where is Mr. Dixon interested? Where's Mr. Wyckoff interested? Where's Mr. Reload Zone interested? This isn't rocket science. This is really, really keep it simple, stupid stuff. Like I said, if we're lucky, maybe they just rip the Band-Aid off right away, get it done. But my hunch is whatever the path is here, it's gonna. This is a very dangerous market. Very, very dangerous. I can't even justify even like things like nanny nibbling here. I can't. Knock the market down here into the 20s. Maybe we can start justifying nanny nibbling. But really, ideally, I want the market down here. And how we actually get here, I don't know. But I can tell you, if these cycles move the way that I think they do, and they normally do, it's just going to be some sort of grinding process down into value. Usually when they rip the Band-Aid off, kind of like here, when they rip the Band-Aid off really hard. I remember when Kevin was telling us that he bought into here. You talk to most people in social media and stuff, they were scared poopless through this. Everybody was just frozen. I mean, the market was just collapsing. And Kevin, bless his heart, I think he learned a lot working with me, and I hope he's doing really well in life. He had the balls to step in and buy there. And that's what you have to try and do in the face of chaos. If anything, we haven't had a really big red candle in a while, but can you force yourself to step in and buy at levels? We'll see how it goes. Only time will tell. So go slowly. If anything, I often tell people this. This is actually a really good time to actually start getting your business together. You want to run a business of trading, a business of investing, instead of just sitting there and listening to, hey, this guy says that this thing's going to go up. That's a lock. I got to buy that. maybe take it some time and invest in yourself. Learn how to build a business plan, how to actually identify all of these fun little tools that I teach you guys. Um, Squiggly lines are one thing. I mean, it's helpful to learn the squiggly lines. Don't get me wrong. Probably the hardest part of this whole thing is just managing yourself. Just keeping everything sort of on an even keel, not getting too emotionally, either bullishly or bearishly. And then actually acting when you're supposed to act. That takes practice. If you're watching this video first time, or maybe somebody told you, hey, check this guy out, listen to him, he might have something useful to say. One thing I'm going to tell you, if you want to live this life, there's tons of money to be made. You have to learn when it is appropriate for you to go balls deep and when it's best for you just to cool your jets. So, maybe take the time over the next 6-8 months to learn that. Now, as I had sort of said there a moment ago, the one sort of shining part of all of this is if we actually go back in history and we see what do sort of these kind of markets look like on sort of a historic basis, not just sort of day to day, but decade after decade, generation after generation. Where the hell's that damn chart? Maybe I don't even have it here. What did I do with it? I know I had it up there a minute ago because I was like, okay, I want to show them this. Come on, you're around here somewhere. Is this the one I was just on? Must have been. And we'll finish off with this, and I'll head off to Liam. Now, it's just over here, so it's not that one. Not there. Over here, maybe? Yeah, there. Now, this is an interesting study. And this is the one reason why I kind of think we're within a few months of some sort of pivot here. Number one, the sentiment in the space. You see the way the price charts look, looking at NASDAQ, looking at tech, looking at crypto. I mean, everything looks like shit right now, right? So they always say markets always look, it's always darkest before the dawn, that kind of thinking. And most people get most pessimistic at the bottom and most optimistic at the top. And I'm hearing a lot of people starting to talk about recession, hearing a lot of people starting to talk about, oh, it's all over, it's the end of the world, all that. Bear orgy, circle jerk commencing. Yeah. But what's really interesting is this is a look at generations. So this is me, is my generation, sort of in my peak earnings years. This is my father's generation and his respective pivot from the fear cycle into the greed cycle, which usually happens right around these 1980, 2020. Like I said, I actually think the cycle pivot was 1718, but nonetheless, if you look at that Benner cycle, there's 2019, like we talked about. Remember, this is an adjusted chart. So this takes in all the sort of bank manipulation of price. This is my grandfather's market, and he was a big industrialist through the Second World War. And this is my great grandfather's market. And it's kind of cool that actually TradingView even has this data going back over 100 years. So this is my great grandfather's market. Fascinating how you can see sort of through, 2019 peak. Remember that Benner cycle? Here's, I guess the relative same one would be sort of 76, 78, 79, that peak there. Here is 1939. So interesting how 1939 set up that dump. And of course, here is 1899. Got a party like it's 1899. So fascinating how there's a lot of similarities going on here, right? Notice how in the most two recent cycles, banksters own this market. It's their market. In fact, just to remind the new president who is elected, who was actually boss, I think that they actually took a poke at Ronald Reagan just to remind him who's driving the bus through here. And I noticed following that event, Mr. Reagan never said boo to the banksters. And actually, all of his public commentary was anti banksters. In fact, no, pro banksters. In fact, his vice president, and one of the reasons, one of the ways that he got elected, and of course, I've talked to you guys before about how I believe George Bush Sr. is actually the reason why we have as much inflation today. We won't go into that now. But the point being, banksters owned Mr. Reagan, and deficit spending was all of a sudden became all the rage. And of course, we live in the world we live in thanks to that. 1939, 1940, interesting. This is basically your Bretton Woods event. Same thing. Banksters owned the market through here. We often make reference to, holy crap, look at the way the debt to GDP ratio went absolutely insane. And they often say that the reason why that happened was because of World War II. Well, no. And in actual fact, all of that sort of 400% debt to GDP was all a function of the Great Reset. Banksters run the economy. Now, looking back at my great-grandfather, remember, the banksters did not take over the system until over here. And you remember, all you historians, in fact, actually, it was right there. That is where the banksters took over. Interesting how the cycle pivot was supposed to come in here, but the banksters were not in control. And notice that the market actually had kind of a wonky, there's two, right? That's sort of where we are now. And I think what actually has to end up happening if the market acts naturally is, remember, think George Benner and Benner's cycle. I think the market actually has to go like A, B, C, D down into these lows through that. And in this case, the end of this was 1903. So here we are. There's 22. There's 23. I have no idea how this is going to end. Now, if we're lucky and these banksters get away with what they've done, and my hunch is they'll put Mr. Putin back in a box, they'll top out the commodity prices, and as Mr. Williams has told us recently, check out my Twitter feed and, of course, site commentary and daily briefs and stuff about Mr. Williams. We pivot back to the upside here somewhere around the middle of this year. If, however, the banksters are not in control, I actually think there's one more leg to the downside here, which might just catch everybody off guard. And this actually would be sort of that kind of Bitcoin bottoms, like this cycle, right? Where we bottom into the new year and then just bump along for the good portion of the year, trying to find that low. And then coming out of 2005, in this case, 2023, out the other side, we look back and go, yep, well, that was your bottoming window. So it's a tough one. Like I said, if we're really lucky, and I don't know how this is going to play out, we get that pivot sort of in the next couple months. But I think, as Mr. Williams said, I don't think it's in our best interest to put the cart before the horse and start saying this is what's going to happen. I think, if anything, like Mr. Williams said, what we have to see, and really the cool part about it, and pop on the site if you want, we do a 30-day trial. As we said, we actually have sort of a hidden tool that is going to tell us exactly when we go back into easy mode. And it's basically this image. When this image M's out and it starts rolling over, then we know that Mr. Williams' thesis of the end of the interest rate shock is over. And if you know what happens when interest rates top out, once the shock is over, what happens to risk assets, then you'll know what happens next. So it hasn't yet. And the thing is we have, in this case, weekly M's, Andre. But we have to see this top out. As soon as it does top out and it's done, then I think we can officially start thinking, okay, phew, the shit's over. Let's get back to business. I don't know how long that's going to take. Good part about it, though, is we have a pretty reliable gauge, and there's no hurry. We're just, if it takes right through the end of the year, kind of like the 13, 14, 15 cycle with Bitcoin, and we have to end up bottoming next winter, I'm fine with that. I'm not really in any huge hurry. In fact, to finish this off, I'll tell you, anybody who's a TRI OGer, or actually anybody who really wants to get to know us, learn a little bit about us, we're planning on doing a meetup in September, because that actually seems to be the best, sort of a most agreeable time in Portugal. So hopefully, if we're really lucky, we get some sort of dump here in the next couple months. The interest rate market rolls over and we start into rally mode. And by the time September comes along, everybody's woohoo, party, 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 free money, Fed's giving us more money, whatever. Or maybe we're just sort of all crying in our beers. Long and short of it here, Brian's been talking about getting a TRI campus up and running. I've got a bunch of capital that I want to put to work in an actual physical location. TRI's got some capital they want to put to work, and I've put the appeal out. I think what we're going to do is like 33% Brian's going to fund the campus, 33% TRI will fund the campus, and then 33% I'd actually like to invite any TRI OGers who have done well in crypto and would like to help fund and actually have their name on the funding donors list for the TRI campus to get it up and running. I think we're going to, in September, shortlist maybe a dozen or so places in Portugal. And half of the trip is going to be our sort of European TRI meetup. And we did sort of Northern Europe last go round. I might pop back up to Northern Europe, maybe because Stuart's up there in Holland. But we would like to have a meetup in Portugal sometime in the middle of September. So if you can, and of course I'll continue to make reference to this, if you can, would love to see you there. And that's what I'm probably going to be planning on over the next few months is what does that tour of Portugal and I guess Southwest Europe look like? So, all right, I think I'll leave the rant at that. I got to go get pretty for the boy. Have yourselves a great rest of your day. We should have fun this week. Of course, we also have a Fed meeting coming up mid this week, so maybe we'll get some sort of pivot through that. Yeah, as always, thank you, Cole. You read my mind. When you guys give me best wishes for Liam, he seems to be in a pretty agreeable mood. So the only thing left I'll ask for here today is actually two things. First off, if you are interested in learning how to build your repertoire, your business plan, your trading plan, new school term starts. I think we're starting this school term the latter part of May. So in a few weeks, we'll probably have quite a bit of a marketing campaign start up with this in the next few weeks. I know the level 2 program, for example, doesn't start till the last week of May. So I'm not exactly sure on the date on this, but nonetheless, if you are interested, I would suggest you get your name on the list. Also, too, I did find it interesting that usually these down markets, this is actually the best time to take the course because there isn't like 100 people in the damn program. Usually when we're in some sort of face rip market and everybody's all going crazy, and of course they've already spent their money and they're, okay, now I guess I'll go learn. This is a better time to actually take the program because you're going to get a lot more one-on-one attention. There isn't that many people in the program, and you'll have Sharktoshi to yourself. You'll have Grim to yourself. They do the same amount of hours, so you get a hell of a lot more one-on-one attention through these quiet markets. So consider that. If you are interested, by all means, of course, pop on the site and get to know a few of the site members and veterans and what they think of the program. And we'd love to have you on board. So that's coming up in the next few weeks. Keep your eyes open for that. I suppose we'll also have a raffle. So, I suppose we should be talking about how we're going to manage the raffle in the next week or two, Chris. Like I said, the last thing, if you could all just give a nice little sort of karmic best wishes, Brian. I love giving Liam an awesome afternoon. Often when you guys are like, good luck with Liam, best wishes, Liam, he's often in an agreeable mood. So I think I'll leave it at that. Have yourselves a great day. I hope you enjoyed the rant. Hopefully you got some value out of all that. All the best. And the only thing left for Brian to say at this point is bye for now.